Today, we're breaking down Nvidia, ticker NVDA, one of the most influential companies in the U.S. stock market. We'll cover what the business actually does, how the money flows, the latest earnings and segment details, what's moving the stock right now, the big picture fundamentals, and a practical framework for thinking about long-term versus short-term positioning. We'll also bring in public comments from notable market voices to give the full context around sentiment and risk-reward. What Nvidia does. The business in simple terms. Nvidia designs the hardware and software that power modern AI. This includes high-performance GPUs, AI systems, networking, and a growing software stack used in data centers and cloud platforms. The company has evolved from making gaming graphics chips to a full data center platform. This platform includes AI accelerators like Hopper and Blackwell, high-speed networking such as InfiniBand and Spectrum-X Ethernet, and enterprise AI software like NVIDIA AI Enterprise. Management describes NVIDIA as a full-stack provider for AI infrastructure, covering chips, systems, networking, and software. How NVIDIA makes its money. Segment overview. The data center segment is the engine of the company today, driven by AI training and inference demand from cloud hyperscalers, consumer internet platforms, and now, enterprise adoption. In the latest periods, data center revenue accounts for the vast majority of sales, reflecting unprecedented demand for AI compute capacity. Gaming is still a multi-billion-dollar business, but it's now much smaller than the data center segment. It recently returned to growth as PC and gaming cycles improved. Networking solutions such as InfiniBand and Ethernet are a critical bottleneck remover for large-scale AI clusters, with billions in sales reported within the data center results. Lastly, NVIDIA AI Enterprise and related software stacks are scaling as part of the full-stack strategy, with new categories like Spectrum-X reaching meaningful adoption. Latest financials, headline numbers, and trajectory. For the fiscal second quarter of 2025, revenue was $30 billion, up 15% quarter-over-quarter and 122% year-over-year. Data center revenue was $26.3 billion, up 16% quarter-over-quarter and 154% year-over-year. Non-GAAP earnings per share were 0.68. In the fiscal fourth quarter of 2025, quarterly revenue was $39.3 billion, up 12% quarter-over-quarter and 78% year-over-year. Fiscal year 2025 full-year revenue was $130.5 billion, up 114% year-over-year. Non-GAAP earnings per share for the year was 2.9. For the fiscal first quarter of 2026, revenue was $44.1 billion, up 12% from the prior quarter and up 69% year-over-year. Data center revenue was $39.1 billion, up 73% year-over-year. The data center trend line shows revenue rising from roughly $35.6 billion to $39.1 billion across recent quarters, reflecting continued acceleration in AI deployments. Earnings calendar and near-term watch items. NVIDIA has scheduled its next earnings call for Wednesday, August 27, 2025, after market close. Market watchers will focus on guidance for the Blackwell ramp timing, gross margin trends, and the cadence of hyperscaler demand. Key product and roadmap update. Hopper to Blackwell. Management commentary emphasizes strong Hopper demand while the industry prepares for the next generation Blackwell platform. NVIDIA has stated that Blackwell is ramping at a massive scale, with billions of dollars in sales in its first quarter. The company says customers anticipate materially higher AI throughput and long-thinking reasoning capabilities compared to prior generations. Company and third-party analyses have discussed a ramp into late year and fiscal 2026, with demand well above supply in the near term. Management has guided to Blackwell revenue contribution building into subsequent quarters. Capital returns and stock split. NVIDIA executed a 10-for-1 forward stock split effective June 2024. This increased the share count and lowered the per-share price for accessibility. Alongside the split, NVIDIA also raised its quarterly cash dividend on a post-split basis. Commentary around further splits is speculative. The long-term value case centers on cash flow and AI leadership, not split mechanics. What's driving the story right now? Themes and news. The AI infrastructure build out is a key driver, with hyperscalers like Microsoft, AWS, and Meta being large buyers, and enterprises beginning broader AI adoption, supporting sustained data center demand. Networking bottlenecks are also critical, with InfiniBand and Ethernet solutions being central, and billions in unit sales underscoring the networking moat. Regarding China and export controls, Nvidia took inventory-related charges tied to China-focused products, but demand outside of China remains robust as the company navigates regulations. Furthermore, software and platforms like NVIDIA AI Enterprise continue to scale, building recurring elements into the business model. Lastly, gross margins and mix remain high by semiconductor standards, but can fluctuate with product mix, next-gen ramps, and pricing dynamics. Fundamentals, strengths, and risks. The company's strengths include market leadership, as NVIDIA is the de facto standard in AI training infrastructure with strong ecosystem lock-in. Scale and velocity are also a strength, with extraordinary revenue expansion. Finally, demand visibility from hyperscaler capital expenditure plans and enterprise interest offers multi-quarter visibility. Risks include the supply-demand balance, where demand has been above supply for next-gen parts, and the timing of ramps can shift revenue. The competitive landscape is also a risk, as rivals and internal silicon at hyperscalers are intensifying. Regulatory and geopolitics are a factor, as export controls have already impacted products. Finally, concentration in the data center business means any slowdown in hyperscaler spending can affect growth rates. Valuation context and sentiment signals. The stock's rise has been tied to repeated revenue and earnings per share beats and raised expectations for AI infrastructure demand. Analysts have continued to increase long-term data center revenue estimates post-earnings, reflecting conviction in AI acceleration, though expectations are high and subject to revisions. Market coverage has emphasized that forward guidance and next-generation timing are critical for valuation support, especially as year-over-year comparisons get tougher. Select public commentary and notable mentions. Management tone from CEO Jensen Huang repeatedly underscores unprecedented demand for accelerated computing and generative AI, calling out that Blackwell is scaling and that AI will transform every industry. Third-party coverage highlighted that Microsoft has deployed tens of thousands of Blackwell GPUs and expects to ramp toward hundreds of thousands, aligning with hyperscaler commitment to AI infrastructure. Media and analyst narratives ahead of earnings have focused on sustained triple-digit growth rates, the importance of Blackwell timing, and margin dynamics. What to watch in the next 3, 6, and 12 months. Key areas to watch include the Blackwell ramp, specifically supply, delivery timing, and customer deployment scale. Also, hyperscaler capital expenditure, with signals from Microsoft, AWS, Meta, and others. Enterprise adoption of AI systems and paid uptake of NVIDIA AI Enterprise is another area. Margins and mix should be monitored for any shifts, as well as regulatory developments and trade dynamics. Investment framework, long-term versus short-term. This is a strictly analytical framework, not a recommendation to buy or sell. Long-term framework thesis pillars include continued leadership in AI accelerators and network effects from the CUDA and software stack. What could go right includes a successful Blackwell ramp and sustained hyperscaler spending. What to monitor includes competitive entries, gross margin durability, and regulatory shifts. Short-term framework catalysts include the upcoming quarterly earnings, guidance, and Blackwell shipment details. Risks to near-term sentiment include any ramp delays, order pushouts, or margin compression. Stock split and accessibility. The 10-for-1 stock split completed in June 2024 increased accessibility and liquidity, but did not change the intrinsic value of the company. Fundamentals, not splits, drive long-term returns. Closing take. NVIDIA sits at the center of the AI build-out with a full-stack approach that includes GPUs, systems, networking, and software, underpinned by record-breaking data center demand and a pipeline extending into the next-generation Blackwell platform. Financial results have been historic, with fiscal year 2025 revenue more than doubling year over year, and subsequent quarters continuing to show powerful momentum. The opportunity is significant, but so are expectations, execution demands, and competitive and regulatory risks, which means outcomes can be volatile over shorter windows. This script simply summarizes the latest data and context so that each investor can decide based on their own goals and risk tolerance.